What's up, everybody? We are back, and it's time for the weekend review on the S&P 500 Futures ES. But before that, I wanted to remind everybody that starting on Monday, I'm going to start doing something very special. Every day at 5 o'clock Eastern Standard Time, we're going to start doing a post-market breakdown. We're basically going to go over the ES, what it did, what it played, how it compares to our trade plan, and how we can better prepare for the next day. So make sure you tune in. I'm going to be streaming on X and YouTube and Twitch and Substack. So look forward to seeing you there. So now let's get into the weekend review. And before I forget, I wanted to start with VIX because I tend to either save it for last or I forget about it altogether. So first and foremost, VIX is just absolutely getting its head pounded in. We have been watching this 1735 level for quite some time. It's been getting some action, and this is what caused our first big push down on the Trump news for the tariffs on, I believe it was last Wednesday. So long story short, ever since then, we've been just getting our head beat in on the VIX ever since they played this weekly level at 2078. And now we are down underneath our significant spot here underneath the 1735 monthly. It was also a daily. Went ahead and got rid of that for you guys as if it's not important now. What is important is this make it or break level right here at 1735. So I want to show you exactly what we're going to be looking at for above, below, for more down. But right now, it looks like the VIX is going to continue down. However, I do want to remind everybody, when we start to get down to this $16, $15, $14 range, we can expect some sort of reaction somewhere in here. So I'm looking for areas that can possibly give us an inflection point that could cause a little speed bump in our up move in the indices right now. So first and foremost, VIX at 1735, very important pivot for us to get above and below. Our next one that we're sitting on right now is the 1617 weekly. So if we get below that, that's another significant headwind for the indices. You can look and see how they are kind of boxed in between our monthly and our weekly right here. So a push below the 1617 will bring us down in these two untested dailies, which I think one of these could potentially get a reaction. How big? We don't really know. The idea is right now is we just know that we're getting into an area where we tend to get a reaction for VIX, and so we need to be prepared, for a small pullback in the indices as, we're cruising all-time highs. We gapped up crazy on CPI. It was the first time we've had news in a month, and, the numbers came in a little hot, but I think the reason why the market blasted off was simply because it's just more fuel for the fire for them to guarantee a rate cut. So, the market is really wanting these rate cuts, and, they're going to give it to them. So, as they continue to have numbers come in a little hot, believe it or not, the market likes it. So, just, cheaper money. So you can see these two dailies right here, 1529, 1493, and then I think one of these will get a reaction in here. And if not, we had this major weekly at 1422. It's definitely tested, but it's just another spot for us to use as an above below. So wanted to point those out to you guys. Really the main kicker here for us is below the 1617 and above the 1735. You guys know that when we played the 1735 last time, we called this out in the plan. We got a pretty big push here. It was like 16%, and it dropped the indices, I don't know, it was like 100 points, 80 points, something like that. So we know that this is a big spot for us to keep in mind, okay? So let's just go ahead and get right into it. You know how I like to do the high time frame TPO. The weekly is my bay. This thing kind of gives us an idea of what's been going on in the bigger picture. And first and foremost, I want to just show you this. This is 1, 2, 3, 4, 5, and this was our 6th week that we were essentially balancing in a range as they've accepted this value, and now we've popped higher. And we've popped higher significantly. And we have this big gap here that was created on Friday from the CPI that runs from essentially, let's just call it 67.90. It looks like, 67.90 into 68.11. So we have some inefficiency here. This is obviously going to need to get filled at some point. But as you guys know, 2 weeks ago, and this was even before we dumped, I was talking about how we had this massive bullish imbalance. And this massive bullish imbalance actually takes us all the way up to 69.50. I know it seems crazy, but I talked about this, months ago that I think we're headed to $7,000. And then lo and behold, JP Morgan came out with their collar, and their top collar is at 69.50, and that thing tends to act like a magnet. So we want to keep in mind that this is the overall higher target. How we get there is a different story. Okay, some levels that I want you guys to really kind of keep in mind and in focus is 1, we have the weekly POC at 91. Okay, from 10.5, and we also have the gap at the same spot, 6,800. We also have the previous weekly value area high located right here at 67.88. Okay, so this is a big spot for us. For those of you guys who trade with me quite frequently, you know I love the weekly value area highs and lows. Okay, so I like this area for a potential buy spot, just to be quite honest with you. And we're going to get into that when we get into the candlestick charts a little bit more. The 32 was big this week. As you guys know, we put out a trade plan talking about 67.32. If we get above this, we're going to launch. And we did. That was Thursday. And they pushed up 120 points from this spot. But this is where the weakness essentially ensues. So, right now we're looking to stay above 67.32. This is going to be our major high time frame pivot for above or below, guys. So nothing for you to be concerned about initially, but something to certainly keep on your chart. And the daily candlesticks absolutely confirm that. So another thing I wanted to talk about is, of course I'm trolling Twitter and I see guys talking about, it's a blow off top, blah, 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 right? Like, because you got this huge gap up and, can it pull back? Yeah. But blow off top, sincerely doubt it. I will admit, there is some price to earnings ratios on the tech side that are overvalued. They're all, stretched out significantly, but there are a lot of stocks that are down a lot and have the ability to still come back up, which could drag the indices much higher. And yes, a lot of this stuff is a tech-driven AI bubble craziness. But at the end of the day, that does not mean that we can't go higher. And so, don't get caught up in the hype that this thing is going to just get smashed. I mean, can it come down 100 points? Sure, absolutely. I would love that. That's actually my buy spot, and I'll show you. So, one of the things I wanted to remind you guys of, what we just talked about was this happened previously. Look at all these. 1, 2, 3, 4, let's just call it 5, 6, 7, contained in this range, right? And then what happened? They accepted, they pushed up, right? And then what do? Then we find our next, 6 or 7 weeks. And that was this batch right here. We sat here percolating, right? Accepting value. Now we started to push up again. So do I think we're going to continue going up? Absolutely. We have no reason to be concerned. VIX tells us that, we have no reason to be concerned at this point in time. Now, a lot of things can change. Trump can say something stupid. We have a meeting with, or he has a meeting with China's President Xi next week regarding the tariffs. We have a bunch of big tech earnings, and we have FOMC as well. So next week is going to be huge. Don't get me wrong. It's going to be massive, and there's going to be volatility, and we need to be prepared for it. But right now, we're still pointing up. And a lot of you guys who follow along, we did this. We had this golden cross not too long ago, and we talked about this as well. I put this post out on August 30th. It got a lot of views. People really receptive to this really well. And it's because it's something that rarely happens. This is the 100-day over 200-day. It happened on August 18th. I mean, look at this data, right? So this has only happened 15 times over, in the history of the S&P, that the 100 crosses the 200. And essentially, you have a positive average return rate all the time, like the whole time. For the next 1 to 2 years, we're going to put up some major numbers. And even 1 month, 3 months, 6 months, we continue to put up, big numbers consecutively over and over again. So, blow off top, seriously doubt it, right? And I'm just, this is going to be important. For the guys that haven't read this, I will include the link in the post. I think this is a great post. And it kind of helps keep us reminded of what side of the trade we should be on, okay? Because a lot of people say, oh, well, that was months ago. It doesn't matter. This shit is like good for, a year or two. So just always keep that in mind. Now, I've decided to approach this a little bit differently. You guys know I'm a RTH cash session trader. And I thought it would be, instead of going through each time frame and walking you through these, I thought this would just be a great way to highlight what's important, as my market outlook really is based on the cash session, considering I trade a lot of cash session levels on the higher time frame. And so let's just talk about this in this standpoint and, get on with it here. So right now, as you guys know, we've got this big bullish imbalance to the upside, like I showed you, right? But, this was Monday. We kind of topped out up here, and they went sideways for a while until they eventually, spilled at the end of the day. Now, we've got this gap here from 11 basically to 90, okay? Now, there is a daily right here that I was actually looking to buy on after we popped up and we didn't get to it, okay? This is a daily at 68.0550 and a 4-hour at 05. We would look for this to play and get continuation back above the previous all-time high before entering this trade. And the reason why I wouldn't just use a resting order and get in this is, 1, this is fairly heavy. 2, we have a gap, and I need some sort of acceptance or trigger here. Otherwise, the stop on this is pretty ridiculous. So for me, I'm going to let this play and get back above the previous all-time high, just to show you guys, why I think it's so important. And this is a very small time frame. I mean, I got this chart up to the side over here, so just want to show you. This is the previous all-time high. Look how they played this thing like hardcore the other day. So, for me, this is the daily. If they pull back in this daily and get back above this, I would assume that this is pretty good to go, and I could have a 6-point stop on that trade there. So that's why I like this and how I would play this. Obviously, this level got a lot of action right here from the bottom up, and since this thing just completely nailed it. So it is a possible chance this thing could play, and so please don't ignore this. The next area that I really like is this massive weekly here. We got the 67.8850 leg tip, and this leg tip was massive resistance. I mean, look at this. Whoop, sent us right down. Okay. We also have the 10.5 weekly point of control I pointed to you guys. Okay, I showed you guys. If we come down in here, okay, we're really close to yesterday's high. They could play into this level. The trigger would be to get back above 67.9250. So we're going to look for this to play and get back above 67.9250 before we actually enter this trade. Okay, obviously got to take some profits around 05, get back above that. We should be pretty good, especially if you get above 12, we could really, really squeeze. The other area that I like a lot is obviously the weekly is a monster, and just to kind of let you guys know, this is a major pivot for us. Okay, so above below this area is going to be a big pivot. We want to get back above this if we get underneath it. Okay, big time. But one of the areas I do like is 67.4475. There is a contained daily there. There's also a 4-hour at 74. Instead of just taking this, resting, I would look for this to get some acceptance above 76.50. Get long, have to start taking profits around 88, and then hold some runners. If we squeeze above this, then we continue to add in our trade, etc. Okay. Now, the next level below us, okay, because this is the leg. We've created a new leg up, by the way, guys. So as you guys know, we talked about on Thursday, I actually thought we were going to be bearish, ended up putting out a trade plan review that morning and saying, hey, listen, if we open up above 32, this thing's major bullish, right? And that's exactly what happened. They opened right above 32 right here, and then they just gassed it all day. And so we actually squeezed like 70 or 80 points, okay? And then the very next day, they shot up in the pre-market with the CPI. So we made a new daily leg up. And 32 is going to be our major pivot for above below, just like I showed you guys on the TPO with the value area low, okay, for the weekly value area low. All right, so other than the 74, I've got a weekly here at 61. Do I like it? I do. And the thing is, I don't want to ignore it. I don't love it. That's the thing. And it very well could play, but I would really need to see it get back above 74. And I know that's pretty huge. We're talking about 61 to 74, not taking a trade, being 14 points late off the low. Again, this level is here, and I'm acknowledging it. Okay, and the same thing applies for the 50. The 50 is also a big daily. The 50 actually took us down quite significantly on Thursday, 2 Thursdays ago, and it also played as amazing support. So I don't want to ignore this level either, and it is untested. And just to show you what it looks like on the 4-hour over here, the reason I like this level is just, when you look at this trade and what it has done in the past, the way that it's held, smacked, and then now we've kind of kept us down, and then this was Thursday again, they got above 32, which is our red level right here, and then once they got above 50, this thing was cruising. And so 50 is technically untested. But the real leg in, the new leg in, the one that I'm really interested in, is down here at 67.38. We know, and then we also have a 4-hour at 67.36, and the ETH daily is at 67.37. This is our key prime area. We also have monthly VWAP here, and then, like I showed you, we had that previous weekly value area low, and then our significant weekly here. So it kind of all goes bad underneath here, but this is the leg in, this is the inception of the move up, and this is really the prime buying spot, just to be quite frank. For me, there's 2 areas that I really, really like more than others, and I really like this spot right here, this weekly, just given the nature of the beast, and then I love this 67.38. Okay, and then obviously I would be very interested in 74 as well, but I needed to play that trigger. Okay, and they all have triggers, right? The idea is we don't know what's going to react, so we just look for it to accept value. And once it can accept value and kind of get above something, that makes sense. This level down here, this 38, 36, I absolutely love this level. There's a lot to love about this. But if you wanted to be sure, wait for it to get back above 67.45, and ultimately the daily is 67.50, and you should be good. Okay, it really all goes south underneath that, people. So we don't really have too much that's tested or untested, underneath the 32. We've got this significant daily at 06, but once we start to come down, as you can see here, there's really not a whole lot. The daily, the red dotted levels basically mean they're dailies, but they've been tested, and so is this weekly. So as we continue to progress higher, that's what we're looking for. All right. I also wanted to show something kind of interesting here as well. Just a different approach. This is our daily as well from a VWAP perspective. We are just absolutely cruising. I mean, we're well above the first standard deviation, but we keep bouncing off the 50-day moving average, and obviously the 20-day moving average is, we're just riding it. And it is also located right here at the 67.40, which is the same place that I was talking about right in here at your 67.38. And so there's a lot of reasons to really like this spot. Okay, so I will pull this over here and show you something else that I think is really interesting. So these are VWAP charts. These are the high time frames on the VWAP charts, and not necessarily super high time frame, but this is monthly. This is our monthly VWAPs, and 1 standards, 2 standards. We're bumping our head on the second standard right now on the monthly chart. And if they bring it back, our monthly VWAP is right down here on 32, which is where I like that leg. The monthly point of control, however, is in a different spot, and we've got the monthly point of control right here at 67. Okay, so right there by our weekly. All right, and then the other side of this is the weekly VWAP. We're actually above our second standard. If we pull back and we pull back into the weekly point of control, we're at 74. That's directly on that daily 4-hour that I was showing you guys, and weekly VWAP was right here at 70. So we've got a lot of reasons to like that area, which, just so you guys understand where that was at, that was this daily area right here. This is the 70, where I said we would want to see the trigger above 68. So these two are my favorite. Well, let me rephrase that. I like these two levels. Obviously, this is our main pivot to get back above for higher continuation. This is probably my favorite buy zone if we're going to get down in here in the 38. But other than that, I like these two spots here. So are we going to have a blow off top? Are we going to get decimated? I don't know, probably not. But with that being said, you just never know. You got to stay prepared. And I've given you guys the levels now to make some educated decisions. So play them as you see fit. And I look forward to seeing you guys on Monday when we start to do the post-market breakdowns. We'll see how the plan compares, kind of see how this thesis plays out, and we'll go over the trade plans on Tuesday and see what's kicking. So you guys have an excellent weekend, and I will talk to you soon. Cheers.